Welcome back to Roxham TV. I'm your host, Jamie. Today's show is one you do not want to miss because we are looking at a major shift that could completely change how markets move in the next few months. So first, we have the Federal Reserve may not be cutting rates next. It might actually hike again. And if that happens, it doesn't just affect the US. It hits global markets, it hits crypto and liquidity everywhere. At the same time, we are seeing rising tensions in the Middle East, oil prices pushing higher again, and global markets are already starting to react. So today, we are connecting all the dots from macro to geopolitics and, of course, crypto. So you can understand exactly what's driving markets right now. First, we'll break down the big macro shift. The Fed may be turning more aggressive yet again, and this time it's not because of strong growth. It's actually because inflation is coming back through energy. We'll explain why oil, geopolitics, and interest rates are now all connected, and why this could create a stagflation style environment, which is one of the toughest setups for the market. Then we go deeper into the geopolitical side because right now we have ceasefire between the US and Iran, but the problem is both sides are telling completely different stories. Donald Trump said the US won. Iran said they forced the deal, and now even the media is caught in the middle. We'll break down why this confusion matters because markets don't just react to facts, they react to narratives instead. After that, we zoom out even further. So Donald Trump is now turning his attention toward NATO and yet again, Greenland. This is no longer just about one conflict. This is about cracks forming inside global alliances. And if alliances start to weaken, that has direct consequences for oil, for trade, and global stability. Then we shift into crypto. So South Korea just dropped a major new crypto bill that could shape how the entire industry is regulated going forward. From stablecoins to exchanges to market structure, this is one of the most comprehensive frameworks we have ever seen. And what happens in South Korea doesn't just stay in South Korea. It often becomes a blueprint for the rest of the world. We'll also talk about Wall Street stepping deeper into crypto or Bitcoin. Morgan Stanley launching his own Bitcoin ETF, not just offering assets anymore, but building its own product. This is a big shift in power from participating in Bitcoin to controlling how money flows into Bitcoin. And finally, we'll touch on one of the most talked about mysteries yet again. Is Adam Back actually Satoshi Nakamoto? So the speculation is back, but more importantly, we'll explain why it doesn't actually matter for Bitcoin. And make sure you stay with us all the way till to the end of the show because we have a very special guest joining us today who is the CEO of MEXC. This is someone right at the center of the crypto market, seeing real-time user behavior, liquidity flows, and trading trends. And I'm going to ask him the questions that actually matter right now. For example, like where is the market heading next? Are we still in a risk-on cycle or is volatility just getting started? And how should retail traders navigate this environment? So if you want a real inside view of the market, you do not want to miss that conversation. So anyways, a lot to get into. Let's get straight into the first story of today. There is a major shift in macro right now. So the Federal Reserve may not be cutting rates next. It might actually hike rate, and that changes everything. So let's get right into it. So what just happened is that Cleveland Fed president, so here's the president's picture. So Fed President Beth Hammack just signaled the interest rate could go higher, not lower, as inflation starts rising again. And the reason she is giving out is quite simple. Energy prices linked to Iran conflict are pushing inflation back up. Right now, if we quickly hop onto Fed Watch, So the Fed is holding interest rate at 3.5% to 3.75%. And that is already the sixth straight meeting with no change. So despite whoever going to replace Jerome Powell, there is only very limited room for the Fed to cut rate because the core problem is inflation. And if we take a look at the, where is it? So inflation data, here the CPI report, like inflation is basically not cooling fast enough. So if we take a look at the headline inflation is sitting at, so January 2026 is sitting at 2.4%. So this is over the past 12-month percent change. So core inflation is also now expected to be around 2.7%, and headline inflation, which includes energy, could go up to as high as 3.5%. And of course, that is way above Fed's 2% target. So suddenly the conversation is changing from when will the Fed cut rate to does the Fed need to hike again? So if we go back to Fed Watch, so this is the probability of like people in the market guessing whether the Fed will cut rates. So these are all the Fed meetings. So in late April, we have another one. So 99% of people expect we are going to hold rate unchanged. So like we haven't got like based on this probability on Fed Watch, we haven't really got a really high probability that people are expecting that we're going to hike rate yet again. But like at least from this news, there are someone from the Fed is saying, okay, maybe it's not the time to cut rates. It's actually the time to hike rate. Now, this is where geopolitics connects directly to monetary policy. The war involving Iran is pushing up energy prices, and this is not just a short-term spike. This is becoming a structural cause, something that lasts for months, not days. And when energy costs stay high, they start spreading into the rest of the economy. So transport becomes more expensive, production becomes more expensive, and everything starts to cost more. And that is exactly what the Fed is worried about. Now, here's where things get even more interesting. The Fed is not operating in isolation anymore because the Strait of Hormuz, controlled by Iran, is one of the most important oil routes in the world. So even like every disruption there directly impacts global energy prices, and that feeds straight into inflation, which means, in a way, geopolitics is now influencing US interest rate decisions. And before this, markets were pricing in rate cuts in 2026. But if the Fed shifts toward hikes instead, that completely flips the narrative. And this is where things get dangerous because higher rate and slowing demand, that means a stagflation risk is on the table again. And that is one of the worst environment for the market. Now, let's look at how markets are reacting globally. So here we have a table. In Asia specifically, markets are already trading lower. So if we take a look at Hang Seng Index, we dropped 0.3%. Same for Kospi, which is the Korean stock exchange. It dropped 1.6%. Nikkei, which is Japanese index, it dropped 0.7%. Same for Shanghai is as well. So everything is happening like even after US markets rally. So a simple question we're asking, what is going on in the Asian market? So it turns out Asia is reacting to two things at the same time. First, the ceasefire between US and Iran looks really fragile. There are already accusations that the deal may be breaking down. Second is that rising oil prices are hitting Asia specifically hard because many Asian economies depend heavily on imported energy. So when oil goes up, costs go up and growth slows down. At the same time, if the Fed hikes rates again, global liquidity would tighten. So that would put even more pressure on Asian markets, specifically speaking. Oil prices are already moving higher. So Brent crude oil is near $96 per barrel. WTI is pushing toward $97. And this matters because oil feeds directly into inflation. So if oil stays high, the Fed has even more reason to stay aggressive. Now, if we step back and take a look at the bigger picture, what we are seeing right now is that we are entering a situation where inflation is rising again, growth is slowing, and interest rates may be going higher. That combination tightens financial conditions everywhere. Housing becomes more expensive, corporate borrowing becomes harder, and consumers feel the pressure because we feel like we are not as rich as before. So here's the deeper issue. The Fed is trying to fight inflation, there's no doubt, but the broader system is still running large deficits. We are talking about funding the war, relying on energy flows it doesn't really control. So you have one side trying to slow the economy and another side pushing costs higher. And that creates tension inside the system. So I would say going forward, there will be three things to watch. Like first, does the ceasefire between the US and Iran actually hold? Second, do oil prices continue rising? And third, does the Fed shift its tone from cuts to hikes? Because those three factors will drive markets. The bottom line is the Fed may not cut rates next. It might hike, but like based on the probability table, it's not really reflected on the chart here yet. Asian markets are already reacting with stocks failing and oil rising. So if this trend continues, we could be moving into a much tighter global financial environment, which means the next move in markets will not just depend on the Fed. It will depend on what happens next in oil, in geopolitics, and in global stability. And that's exactly what we're watching here on Roxham TV. So interestingly, after 90 minutes, the ceasefire was announced, a new headline came out that changed the tone completely. So CNN reported that Iran is claiming victory and not just a small win. Iran is saying it forced the US to accept its own 10-point plan. This statement came directly from Iran's Supreme National Security Council, and according to that statement, US suffered what they call a historic defeat. So right away, you have a completely different narrative emerging. Now, remember what we discussed earlier. So from the US side, the message was clear. Trump said Iran agreed to his terms. But from Iran's side, the message is the exact opposite. They are saying the US agreed to their conditions. So both sides are claiming they won. And that tells you something very important. When both sides describe the same argument, like same agreement in completely different ways, it usually means the details are not fully aligned. And this is not a finalized peace deal by any means. This is a very fragile pause with very different expectation on both sides. Now, this is where things escalate even further. Trump responded immediately and he certainly did not hold back. So on Truth Social, this is what he posted. So he called the report a fraud. He claimed it was coming from a fake news source because that is what he called for CNN News. And he demanded that CNN take it down and apologize. He even went further, saying authorities should investigate whether a crime was committed. Then this turned into something even bigger. The chairman of FCC also stepped in. So he called CNN's report outrageous and said that publishing this kind of headline during a national security moment requires accountability. So now this is no longer just geopolitics. This is also becoming a media and political battle. But here's the key part. CNN did not back down at all. They said the statement came directly from the Iranian officials and that it was and that it was also reported by multiple Iranian state media outlets. So from CNN perspective, like, yes, they're simply reporting what Iran is saying, not confirming who is right. Now, step back and look at the big picture. This is exactly what uncertainty looks like in, I would say, in real time. We have two governments telling completely different stories, and you have media reporting one side while the other side pushes back hard. So the truth is not fully clear yet, and that creates confusion in the market because markets don't just react to facts. They react to narratives, and right now the narrative is unstable. If investors believe the ceasefire is real and stable, markets stay calm. But if they believe the deal is weak or could even break, volatility comes back very quickly. So this is not just political drama. This directly impacts oil, it impacts stocks and also crypto. So what we're seeing right now is not clarity, it's just like competing narratives. Donald Trump said one thing, like the U.S. won. Iran said it forced the deal. CNN reports Iran's version, and the U.S. pushes back hard. So the bottom line is the ceasefire might be real, but the meaning of the deal is still very unclear. Both sides are claiming victory, and that usually means final agreement is not settled yet. So the next move in markets will depend on what versions of reality investors choose to believe. All right, so we will take a short break from here. When we come back, we are diving into more Donald Trump's news because some of his announcement is quite intimidating. Right now, he kind of moves his target towards NATO and also Greenland. And as we cover here on Roxham TV before, Greenland is kind of like one of his targets for quite a while. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxham. One currency, one place.
Oh, I forgot to mention, dividends on Roxham are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxham. 11.5%. 11.5%.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. Now, let's stay on the geopolitical story because this situation is getting even more complicated. Just hours after Donald Trump shifted his focus, and this time he's targeting NATO and even Greenland yet again. Surprise, surprise. In a post, Donald Trump said NATO was not there when the US needed them, and he went even further, calling, this is interesting, so calling Greenland a poorly run piece of ice. Now, this is not the first time he has brought this up, but the timing-wise it matters because this is happening right after the Iran war and the ceasefire announcement. So what's going on here? This is really about frustration inside the US over how its allies responded to the Iran conflict. So many NATO countries did not fully support the US military efforts. Some refused to provide airspace. Others did not send the naval forces to help reopen the Strait of Hormuz. So, from the US perspective, that was a test. And Donald Trump believes NATO failed that test. Now, this is where things start to matter globally. Donald Trump has openly criticized NATO multiple times this week. He even suggested the US could consider leaving the allies, and that is a big deal because NATO has been the backbone of Western security for decades. So this is not just political talk. There is real friction inside the allies right now. Now, let's talk about Greenland because that might sound random, but it really isn't. Greenland is strategically important. So if we hop onto the 3D map, here is the United States. And if we go to zoom out a little bit, here we have Europe on the other hand, and Greenland is literally just right here. So from Donald Trump's point of view, Greenland is kind of in the middle, like between the US and Europe. So that's why he thinks it's very strategically important, though we have Canada kind of like blocking the way. But he also called Canada the 51st state of the US anyway. So there is like growing importance for military positioning and resources and Greenland. And that's why Donald Trump is really interested in maybe having that piece of land. Donald Trump said before the US wants Greenland, and reports suggest the US is even looking at expanding military presence there. So when he brings up Greenland yet again, this is not just a joke. This is part of a bigger strategic picture. Now, connect this back to what's happening in the Middle East. The Iran conflict has exposed divisions between the US and its allies, and at the same time, is testing global alliances. Like some countries are choosing not to get involved, others are pushing back quietly. So what we are seeing is not just a war. We are seeing pressure on the global ally system itself. And here's the reality check. Even with the ceasefire in place, tensions are not going away. Iran has already accused the US of violating the agreement, and there are reports of escalating strikes in the region. So this ceasefire is holding for now, but it looks very fragile. So if we step back and look at what this really means, this is no longer just one conflict. This is about how global power is shifting. We have the US pushing for support. You have the allies hesitating, and you have new tensions appearing inside the long-standing alliances, and that creates uncertainty. And markets, of course, do not like uncertainty because if allies weaken, global stability weakens, and that affects everything we're seeing. So we are talking about oil supply, we are talking about defense spending, trade relationships, and yes, of course, like that would affect your back, including Bitcoin and also crypto. Donald Trump right now is openly challenging NATO and bringing Greenland back into the conversation. The Iran war has exposed cracks in global allies, and even with a ceasefire, tensions are still rising beneath the surface. So the story here is not just about war, it's about whether global allies are starting to break apart. And that's why we are watching here on Roxham TV. All right, so let's shift gears a little bit and do hop onto crypto and specifically what's going on in South Korea. So this is a big move that could impact the entire crypto industry because like South Korea's ruling party has just announced a new law called the Digital Asset Basic Act. And this is not a small update at all. Like, this is a full framework we're talking about, designed to regulate everything in crypto. So from issuance to trading to custody, all the way to supervision. Now, here's the key point. This bill officially recognized digital assets as part of the real financial system, not just speculation, not just trading, but something that connects financial markets to the real economy. And that is a big shift because instead of fragmented rules, South Korea is moving toward one united national system. Now, at the center of this bill is something very important. So there's this new category called value-linked digital assets. This mainly refers to stablecoins. So things like fiat-backed tokens or assets linked to real-world value. Under this law, if you want to issue a stablecoin, you need approval. You need proper reserves backing the asset, and you must guarantee redemption. So users can always get the money back. This means stablecoin issuers will face much stricter rules. So no more loose structures, no more unclear backing, and everything becomes more controlled and more transparent. Now, this didn't come out of the blue. There has been a major debate inside South Korea between regulators. So on one side, the Bank of Korea argued that only bank-backed institutions could issue stablecoins. They even suggested requiring at least 51% bank ownership. On the other side, the Financial Service Commission pushed back. They warned that limiting stablecoins to banks could slow innovation, and that could prevent new players from entering the market. So what we're seeing here is a balance between control and innovation. Now, this bill goes far beyond just stablecoins. It introduced licensing and registration requirements across the entire crypto industry. That includes exchanges or brokers or custodians and even advisory firms. Companies will need to follow strict rules, so clear disclosures, strong internal controls, and proper reporting. There are also explicit bans on crypto market manipulation and the use of insider information. So this is about making crypto looks more like TradFi. And the bill also proposed creating a new digital asset committee. This group would coordinate policy across the entire sector and guide how the industry develops going forward. So lawmakers are basically saying this. The current system is too focused on just protecting investors and not enough on building a full market structure. And this is a move toward long-term regulation, not just short-term protection. At the same time, enforcement is tightening. Regulators are now forcing exchanges to delay withdrawals. That's interesting. This is to combat rising scams like voice phishing because these scams rely on speed. So by slowing withdrawals, authorities are trying to reduce fraud. Now, if we step back and look at the bigger picture, South Korea is one of the most active crypto markets in the world. A huge portion of retail trading happens there, and it has deep liquidity and strong participation. So what South Korea builds here or builds there, other countries will watch closely. This is not just local regulation. I would say this is a blueprint for how government may regulate crypto globally. This bill is trying to answer three key questions. So, who is allowed to issue digital assets, how those assets must be backed, and how markets should be controlled. And those are the same questions regulators everywhere are asking right now. And that's why this story matters for every crypto investor watching right now. All right, so we'll take a short break from here. When we come back, we are diving to a newly launched BTC ETF from Morgan Stanley. And this is a huge deal for crypto in a really good way. And that might create more competition between BlackRock and other service providers. So if you're intrigued, do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. So now let's talk about this because there is a major shift coming out from Wall Street. Morgan Stanley just launched its own spot Bitcoin ETF. So the ticker symbol, if you guys are interested, is here. So MSBT, there you go, guys. And the product is called the Morgan Stanley Bitcoin Trust. Now, here's why this matters. This is the first time a major US bank is not just offering Bitcoin ETFs, but is actually issuing its own. There is, of course, like a spot ETF out there. This is also a spot ETF. So what that means is basically the fund holds real Bitcoin directly. The custodian is handled by Coinbase, and administration is done by BNY Mellon. So this is not synthetic exposure. This is real Bitcoin sitting behind the product. Now, here's where it gets very interesting. So Morgan Stanley is coming in very aggressively on fees. They are charging only 0.14%. That's significantly lower than competitors like BlackRock's IBIT, which is around 0.25%. So right away, they are undercutting the market, but pricing is only one part of the story. What I see in Morgan Stanley and why I'm so bullish on this news is that Morgan Stanley has something even more powerful, which is distribution. They have around 16,000 financial advisors and access to trillions of dollars in client access. So if you think about this, when a client asks about Bitcoin, advisors now have a very strong incentive to recommend their own product because they control the pipeline. They are not just selling Bitcoin anymore. They are selling their Bitcoin product. So here's the key idea. Even a small allocation from Morgan Stanley's client base could translate into massive demand for Bitcoin. Because when you are dealing with trillions of dollars, even 1% is, of course, a large number. And that's why some industry leaders are now calling this monster Bitcoin moment. So if we step back and look at the bigger picture, Wall Street is definitely getting involved into Bitcoin. At first, banks were very skeptical of Bitcoin. Then they started offering access to third-party products. And now they are building their own. And this is a major shift from participating in the market to controlling how capital flows into the market. This also increased competition between ETF providers. So they are competing with lower fees, who has the stronger distribution or more aggressive marketing. And in this game, performance is not everything. Access and distribution matter just as much, if you ask me. So you could be wondering, like, why does this matter to you? You're not even a client in Morgan Stanley. Like, this matter because it directly impacts demand for Bitcoin. So we're going to have more institutional access, meaning more capital entering the market. And when big players start competing to bring in that capital, that can accelerate adoption even further. So the bottom line is Morgan Stanley launching its own Bitcoin ETF is a major step forward for institutional crypto adoption. Wall Street is no longer just offering Bitcoin, it is building that infrastructure to sell it at scale. And that could be one of the biggest drivers of Bitcoin demand going forward. So speaking of Bitcoin, we now have more interesting news circling around the Bitcoin community. So let's talk about this. And this is like, I feel like is recycling the news over and over again. So basically, this new article from the New York Times is once again trying to answer one of the biggest questions in crypto. Who is Satoshi Nakamoto? This time, the article points towards Adam Back. So he is a well-known computer scientist in the crypto space, and according to the article, a trail of clues suggests he could be the Bitcoin's creator. Now, okay, to be fair, Adam Back is not a random name. He is actually one of the strongest candidates people talk about. So he invented Hashcash back in 1990s. That's important because Hashcash is a proof of work system that Satoshi Nakamoto directly referenced in the Bitcoin white paper. He was also active in the cypherpunk community. This is where many Bitcoin's core ideas were discussed years before Bitcoin even launched. And here's another key detail. He was one of the first people Satoshi emailed back in 2009 when Bitcoin went live. So when you connect those dots, the technical ability is there, the timing is also there, and the philosophy is also there. Now, despite all of that, there's still no actual proof, okay? Like Adam Back himself, he has responded again to this rumor, and he clearly said he is not Satoshi Nakamoto. And this is not the first time. He has been denying this for years. So what we have here is not evidence, it's just connections. Now, if it feels familiar, because it should, because we just saw something very similar recently. In 2024, HBO released a documentary trying to refute Satoshi Nakamoto, and that documentary pointed towards Peter Todd instead. He also denied it, and once again, the result was the same. Very strong story, very strong narrative, but weak proof. Now, here's the real question. Why does this story keep coming up over and over again? It almost feels like recycling some news. And the answer is quite simple, because the mystery is still unsolved. Every time the market slows down, media attention shifts from price, because like Bitcoin is down so significantly from its all-time high of 126K to hovering around 71K today. So price-wise, it wasn't interesting. It's not doing anything. As how I address it is a kangaroo market. So the media feel like there isn't much attention for Bitcoin. They're right now shifting to narratives. And nothing is more clickable than the question, who created Bitcoin? Now, if we step back for a second, because this is the most important point. From a fundamental perspective, it actually doesn't matter who Satoshi is. Bitcoin does not depend on its founder. There's no CEO, no company, no central control. And most importantly, Satoshi disappeared, but the system kept running. So this is not an accident. This is the design. Because if Bitcoin had a known founder, that person could be pressured. He could be regulated or targeted. But since no one knows who Satoshi is, that attack vendor doesn't even exist in the first place. So why should you care about this story? Because it highlights something very unique about Bitcoin. This is the first monetary system in history where the creator doesn't even matter. So think about it. There is no founder risk, no central authority, and no single point of failure. Yes, speculation is back. Yes, Adam Back is once again being named as the possible Satoshi Nakamoto, but there's no actual proof. And more importantly, it doesn't change anything. Bitcoin works not because of who created it, but because no one controls it. And that's why it continues to survive, and no matter how many times this misery comes back. I just find this news very interesting, but here we are going to take a short break. But don't go away, because when we come back, we will be joined by the latest CEO, the newest CEO of MEXC. I'll be sitting down with him to break down where the market is heading next, what traders should be watching, and how he is seeing the current volatility play out from inside one of the largest exchanges. That is a conversation you definitely want to stay for. So we'll be right back.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
How about stretch preferred stock on Roxum? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxum gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxum to your clients. Corporate traders, asset managers, old, young, Stretch on Roxum is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
We are in heaven at 11.5. 11.5%. 11.5%.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxum are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
How about stretch preferred stock on Roxum? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxum gives 11.5% monthly cash dividends paid in Bitcoin.
Dang!
Welcome back to Roxum TV, and thanks for sticking with us. Now, as I promised, we are moving into one of the most important conversations of today's show. We are joined by the CEO of MEXC, one of the fastest growing global crypto exchanges, now serving millions of users across the world, and consistently ranked among the top platforms by trading volume. Our guests bring a very unique background with experience across major global companies like Facebook, like Sony, like Bain & Company. Before stepping into the crypto space, now as CEO, he's leading MEXC through a very competitive and fast-changing market, focusing on growth, access, and product innovation. So this is someone with both TradFi mindset, TradFi perspective, and real-time insight into what's actually happening inside crypto markets right now. So Fulgo, welcome to the show. It's great to have you today.
Excited to be here.
Yeah, so congratulations on becoming the CEO of MEXC. So I'm really happy for you, but in 1 minute, I want to ask you what excites you the most about this role right now?
I believe when you have all these opportunities in your hand in this very fast changing the world, I think what excites me the most is how crypto in front of my eyes is becoming a mainstream. Because when I joined, crypto was really, really niche. We were still not sure where the journey will take us. But today, as an exchange, we don't anymore compete with our fellow crypto exchanges. We compete with every other financial service provider. Can be a neobank, it can be a traditional financial asset and investment opportunities. For example, today at MEXC, you are able to invest in US stocks, trade oil, even invest in gold and silver. And I think more and more we are moving to become a single stop shop for all the users' financial needs, or as we can call trade everything super platform. And that is exactly what excites me, to build the next gen financial product for people, for users, for millions who can actually make the very fast financial decisions in a single touch point. And I believe this way we are actually eliminating barriers for entry for millions, because finance is no more a reserved opportunity for very few. Today, with a simple click, users can invest in anything between Bitcoin to US stocks, gold, silver, and even beyond. And I'm sure you already seeing the trend. People are very, very excited about grabbing every possible opportunity out there. And with the rise of prediction market, we see that it's not only about tangible assets. People are also trying to make the right guess where the future is taking us and turn it into the money.
Yeah, so I do want to take a step back for basically your background, because when I was going through your journey, the first thing I was thinking is actually, wow, this is the perfect role for you. Like you are basically the perfect person for this role, because you worked at big companies, a TradFi company, maybe media company like Facebook, Sony, and Bain and Company, even before crypto. So I wonder how has that hone your skill? What were the biggest lessons that you learned from doing all this role from all these different companies before being the CEO of MEXC?
You're very right, because traditionally, my colleagues in a crypto environment, this is usually our game changers, people who had these crazy ideas, they wanted to make them happen, whether we look at the Ethereum's founder, Vitalik, or any other big player in the market. But my background is much, much different. I can say that I'm traditionally trained executive who might not be their perfect fit to start from zero and run something from 0 to 1 in terms of an innovation, but I'm classically trained to scale things, to take ideas from 1 to 100. And I believe today, what makes me a great fit for the entire industry and of course for MEXC is that finally the industry reached its maturity level where we are ready to onboard 1 billion users. We are ready to scale things in a much faster environment, combined with all the other differentiator factors. Because once you innovate, you only focus on the product, on the innovation itself, but scaling something requires complex technical skills, from people's management to working with the regulators and compliance aspect, thinking about multi-dimensional aspects like culture, how to tailor product for each market. And I believe when we look into that sphere, I think I might be today a trailblazer as someone who comes from a TradeFi or traditional Fortune 500 businesses to crypto. But I believe we will be seeing more executives from top industries join us. Actually, we already see a lot of traditional financial background executives are joining large crypto companies to drive this journey of scaling and eventually making the crypto everyday use, or actually the backbone of the financial industry. And why we are doing this is very, very important, because today, as I mentioned, as a crypto company, we do compete with the other financial institutions, because large banks are jumping in stable coins, issuing stable coins. Large corporations are embodying blockchain as a technology. And when we see this convergence, we are already understanding that the industry is kind of the lines are blurring, and both industries are coming together. Today, if you open your neobank app, you will be able to trade crypto probably and invest to different asset classes. Similarly, if you open today MEXC or any other large crypto exchange app, you'll be seeing the similar product offering. But
Yeah, so let me stop you right there, because what you mentioned is that crypto exchanges are, I would say crypto exchanges and the regular TradFi exchanges, the line is getting blurry, because you guys, so MEXC is not only competing with Binance or Coinbase, you are also competing with the traditional app, maybe like Robinhood, that are more specifically trading for stock. But right now they are getting into crypto right now. So like for that, do you see MEXC, if there's any edge, like you, because you're not only competing with crypto exchanges, but also traditional exchanges. So from your perspective, what sort of edge do you think MEXC offer?
The biggest differentiator for us is being much more affordable and retail centric, because almost all large exchanges, if we see as a direct competitors, they cater to the needs of institutions, and players like Robinhood, they have known for making things easy for the user. Actually, Robinhood was serving as one of the inspirations for me when we start taking the MEXC through zero fee journey. Today, we are trying to make MEXC at least 10 times affordable than our closest competitor, with more and more asset classes, from the derivatives market to the spot, from stocks to gold, silver. We are today offering a lot of opportunities for users to trade with the zero fees. And last year only, we returned back to the user around $1.1 billion worth in saved fees that enabled our users to trade more and to invest better.
So like for the trading fee you mentioned, because I noticed you've returned over $1 billion to users through zero fees. I mean, that is really something. So that means like the total trading fee saving that MEXC users collectively enjoy, thanks to the exchange aggressive zero fee model, I would say. So do you think this zero fee is sustainable, or is just like more like a growth strategy that MEXC could afford for like a year or two, then slowly they're going to introduce the maybe a certain percentage of fee again?
Currently, we are trying to expand zero fee to most asset classes, but definitely we are running a business here, and we are not able to offer zero fee in all aspects of the business. But what zero fee does is zero fee makes the most famous products or the most hyped products or people that are interested the most is affordable, because with the zero fee, our goal is to make the barrier entry the lowest possible. For example, if today market is really interested about petroleum because of the geopolitical situation, we do apply zero fee on that asset class, helping our users to maximize the advantage in the market. Similarly, when the gold and silver was at the peak, the market was talking about it the most, we became industry's #1 platform for commodities trade in the trading volume. When it comes to spot market, we try to enable it as long and as much as possible, including Bitcoin and Ethereum, which is very, very rare in our industry. And for derivatives market, we have more than 200 pairs out of 3,000 pairs. Basically, it is not all across the platform. There are still a lot of trading tools that we do charge trading fee, but even on that tools, we try to be the lowest in the market possible, making it at least 10 times more affordable. But when it comes to long-term strategy, I want to mention as a CEO that one thing makes MEXC very unique, and I believe it's a kind of more of an underdog in the industry. The MEXC's growth was fueled by the real users who choose the product. MEXC never done a huge, flashy, multi-million-dollar deal. And we haven't done any sport endorsement. We haven't done any big sponsorship. And that's what makes MEXC very unique. And eventually, zero fee also serves as a marketing machine or the growth engine for the company. And I believe that we are keen to expand it. And zero fee for us at this point is not a campaignable idea. It's a conviction, actually. And that's what we are banking on and building around.
Yeah, so you mentioned the sports sponsorship because we know a lot of exchanges out there, they like to sponsor some football team or maybe be on some car racing track. So I want to dive deeper, maybe a follow-up question. Like, why do you think MEXC not using that marketing strategy is actually a correct thing to do, or maybe helped your brand to grow significantly? Because from my information, correct me I'm wrong, like you were the CEO, COO in MEXC, and you became the CEO in less than a year. And if we take a look at the figures, it's really impressive because you helped drive 90% year over year, year to year trading volume growth. So that is some really impressive figure. Like, do you think like like you mentioned, the sports sponsorship for sport and certain exchanges that they're doing is not working, but MEXC is taking a different direction, like not sponsoring any sports games or zero fee. Do you think that is the strategy that MEXC is doing and is doing really well right now?
It's a very steep learning curve also for myself, because eventually I come from a CMO background, and before MEXC I used to serve as the CEO of BitGet, and definitely at BitGet we have done a huge and loud campaigns with big names like Lionel Messi, La Liga, MotoGP, and the user type that these sort of campaigns onboard, they're very important. I do believe that also sponsorships are really important in this term, because the users you attract are mainly the newbies, fresh users who start exploring the crypto. But on the MEXC's end, our core audience is the 40 million retail user and growing. And our strategy is to already attract the users who are definitely exposed to some sort of the financial investment tools, whether, as we already mentioned, whether it is a Binance or any other large exchange, or it can be someone who's already investing in Robinhood or alikes. We are trying to attract that users and offer them more powerful tool. And doing so, definitely zero fee is a much powerful differentiator, both for a user and also setting us aside and setting us apart the market than any other player. Today, if you open to any catalog in top 10 exchanges by the volume, you will see MEXC, because our users are truly investors, traders, this retail mindset who wants to grab opportunity in the market. And our users would rather get extra 10, extra 100, extra $2,000 saved in the fees that they can reinvest, rather than having a flashy campaign. But I believe moving forward, like once we are able to reach, I don't know, 200-300 million customers as our in our MEXC family, definitely onboarding people from other tracks of the life, whether through sponsorships, whether through partnering with the music festivals or any other culturally significant event, can be an option. But today, what makes MEXC unique is that our idea is how to make the barrier to entry the lowest possible, and how to give the customer the best product suit and best also investment selection possible. And by doing so, we are able to grow very fast. As you mentioned, we had 90% year-over-year growth. In past quarter, we were among top 3 fastest growing exchanges in our industry. And I think all these numbers speak for themselves. Rather than investing into the flashy campaigns, we are trying to bring the opportunity back to our user.
Yeah, that is very interesting instead. But I do want to take a step back and maybe ask on the behalf of the viewers on Roxham TV, like who might not have a really deep understanding of how exchanges work. And you're the perfect person for me to ask this question. So like, since MEXC is offering zero trading fee, like users don't have to pay anything, and they got a combine of basically $1 billion in total that MEXC was offering for free. So like what revenue, like what fees are MEXC earning? Is the exchange making enough money to be sustainable in the long term?
Of course, this is a very, very important question. And I mentioned in the beginning that zero fee covers most popular trading and investment opportunities. But trading and investing is just a portion of our business. For example, today we have around 3,000 projects listed to be traded on MEXC ecosystem. More than 200 of them covered by the zero fee program. And entire spot market is covered by zero fee program. Eventually, during the peak times, gold and silver were covered, and also all the new US stocks that we introduced are covered by the zero fee program. This way, users get almost a half of the exchange ecosystem available to be traded in a zero fee, and the rest we are trying to keep our commissions and trading fees at least 10 times cheaper than our closest competitor in the industry, making MEXC one of the best places to trade. While trading is our backbone, is very, very important metric also for the growth in our business, but we go beyond. For example, at MEXC, we do offer a card product for our retail users to meet their daily spending needs. We have a lot of yield products, and I believe we are one of the best APY providers in the industry. And all these financial tools that we provide is actually making our company revenues also. Therefore, trading fees are important, but they're not the only revenue generator for our business.
Okay, I just learned that there are like more than 3,000 projects listed on MEXC from what you just told me. So I wonder, like, what is the criteria for listing on MEXC? Because I know there are for the MEXC culture, what I've noticed personally is that there is a lot of smaller altcoins or meme coins being launched on MEXC as well. So do you think the traders of MEXC, the user of your platform, they are mainly trading that sector, so more like a Degen-based, very meme coins, very fast flipping. And what is the listing criteria for MEXC? Like, is it like basically it could be a very new token, it could be get listed on MEXC as well?
As an executive, as a person who's leading this company, my logic, my inspiration was to open the gates to infinite opportunities. And as a MEXC, opening the gates to infinite opportunities is not just the opportunities we open for our users, but it's also not being the gatekeeper. Because I think one of the biggest issues in today's exchange ecosystem that most exchanges act as a gatekeeper for young entrepreneurs and people who are building in crypto industry. MEXC's logic is to list first and also sponsor and support the entrepreneurs who are building in our ecosystem, people who have these innovative ideas that need platform. We do have a very rigorous selection though. Therefore, we always look into the project, what kind of differentiator they bring, who are the founders behind, what kind of trader background they have, what kind of community they have been able to build. But for us, the core is how we can bring the most rare gems that industry hasn't discovered yet to our users first. And that's why most of the time, once MEXC lists some projects, we have seen our fellow colleagues from different exchanges also being listing those projects, and that this project or their tokens were skyrocketing, eventually making MEXC users one of the first to discover and one of the first to be able to make 10, 20, even sometimes 100x more in their return on investment. And I think that was one of the biggest strategies that worked for us, because we believe today, as we proudly serve 40 million customers, we shouldn't gatekeep these customers, and we should be able to both provide projects with a great infrastructure and also community of the traders like ours, but also help our traders to discover the gems before they become very, very mainstream. And I recently, I'm sure you also saw across the social media, they talk about this curse of large exchanges. Once they list, there have been so many times that large exchanges or our competitors listed some project and project price or token prices dumped down, because market sentiment was that once that project is listed in such a large exchange, it kind of lost its charm, or it kind of lost its opportunity to make a huge return on investment in 10 or 20 fold. But definitely today, MEXC is one of the places where users are still able to discover new gems. And I believe this way we are able to kind of not only compete with centralized exchanges, but also act as a bridge between centralized world and decentralized exchanges.
Yeah, so you mentioned that Maxi is not trying to be a gatekeeper. So I wonder, how do you balance the risk control and compliance? Like, could you dive deeper into the risk control as well? Because you mentioned that maybe get to know the founders. Maybe like, could you share a little bit more about the process, like filtering out what is the ultimate, like really small altcoins that don't even get to we don't even get to see on Maxi, because like that process, it might be very unfamiliar for users who are just like retail trading on exchanges, especially because there are a number of people that only use centralized exchanges. But what is the process for CEX out there? How do they filter the altcoins that we see on the exchanges, and how do you manage that risk control?
First and foremost, every listing decision is done by the listing committee, which has various members looking into the different projects from different aspects. But for us, the first and foremost is who are the founders, how reliable they are, and what is the general idea of this project, what they are building, an actual project, what kind of a utility is there, especially if it's a utility project, and what are the deliverables expected. Second, we look into the community, how strong the community is, and we run our background research on to see what kind of community they've been able to build, what was the narrative, and how many people are actually interested in this project. Third, we are looking into who are the investors in that particular project and how many people are kind of holding their wallet and what are the main beneficiaries of this project. Then we do a huge on-chain analysis looking into the wallet holders and making sure that this is not a rug pull project or there isn't a single big dangerous beneficiary who could dump to the market, including token allocations, all these unlock periods, and a lot of tokenomic analysis get into the processes. Once we do our own due diligence and background check, then we invite the projects on board, and then we actually not only list the projects, but we have a great care program after the listing, kind of chaperoning these founders through the journey of what happens once you list your project in the ecosystem, right? We want our users to trade. We want the projects and entrepreneurs to reach their goals through these listing processes. And we eventually help them anywhere between marketing, community building, and different trading competitions and opportunities there to make sure that they reach their goals through this listing process. And at the end, for our users, to make sure that our users have the best access to the trading opportunities, we have a very strict guidelines on trading limits, daily liquidity, order book depth, and all the other aspects that would make orders fill quickly and make sure that our users have the best trading opportunity. With these strict guidelines, it is also very important for projects to follow and make sure that they are not getting delisted from the ecosystem, because sometimes by mistake, both users and also entrepreneurs think that listing is the ultimate end of the journey. But I always say this is eventually the day zero. Once your project is listed, it kind of lives in this very competitive environment, and the project needs to take care of all the requirements to make sure that your project is remaining liquid and remaining the right product for our users to trade. And for us, the ultimate goal is to make sure that we protect our users. And if at any point we see that something goes wrong with the particular listing or project, we delist, we inform our users in a very timely manner. But of course, I wanted to also take an opportunity to mention that today at MEXC, we have $100 million Guardian Fund eventually looked into compensate our users if something goes wrong, whether from the security aspect or whether any other mistake that platform does, Luckily, we haven't suffered any security breach or any serious action till today, but definitely we have enough funds to make sure that we are able to provide our users, our customers, with the best solution possible.
Yeah, so thank you so much for sharing that due diligence process. I'm sure our viewers will find it very valuable because, like, a lot of us basically we're just like what a user. We are the retail, but we don't know what the backbone, what the people behind the team they are doing. So thank you a lot for sharing that insight. So, like, I would say, like, despite this DD process, I'm sure there will be like one or two really maybe some rug pull allocation for a certain token. Yeah, it got listed on MEXC. So, like, I wonder if there is like based on your leadership when you were at the time the CEO of the company. Did you see any occasions, examples like this? And if so, how did MEXC handle the situation?
Definitely, when you have more than 3,000 projects, something can go wrong. And our main goal is how first we can prevent this happening. Secondly, how we can detect something like this in a timely manner. We continuously, as I mentioned, run a lot of on-chain analysis. We look into the data points, and we have internal triggers that communicate it directly with the project in case something goes wrong, how we can jump into the process. Because as I mentioned, our main goal is to protect the customer. But if at any point that everything that could go wrong goes wrong, as I mentioned, we have the Guardian Fund to refund our users. But I believe our internal systems are very smart in detecting that. Also, this year we'll be investing a lot into the AI to help to speed up these internal monitoring processes and make sure that we are able to detect any malicious behavior before it touches our customer.
Yeah, because I noticed that MEXC is trying to expand into a prediction market as well. So, like, from your view, like, how does it fit in the whole trade everything vision? And do you think like having even prediction market on a crypto exchange is it adding more risk when it comes to the management side of things for MEXC, or is it adding more risk for even users? Like, what's your take on that?
In opposite, I believe it adds more security to the user, because here you have this centralized organization, a body with a proper compliance, a proper customer care, and you had already done your due diligence of the platform, and platform already did its due diligence to the users, right? We KYC all our users, we know everything about them. This way, user doesn't need to move from product to product, exposing themselves to more risk. For example, if previously, if a user wanted to trade stocks, had to go to one platform. In the second platform, they would trade crypto. In the third, they will go. We saw a huge rise of Polymarket and Kalshi. And like if the user goes to that, and then they have to convert their money to the fiat and come to their banks. It is 4 different due diligence processes. It is 4 different risk exposure, and mainly it would be a 4 long delay into filling these orders. But today, from a single platform, a user can catch all the opportunities in the market. They can trade stocks, they can invest in, let's say, crypto, and also they can use a feature of a prediction market. While it is very important to give just
you
one
gave a really good example because, like you mentioned, users before MEXC doing the prediction market, if they want to get some information about maybe, well, what people on Kalshi are thinking, they can right now just stay in one platform on Kalshi or on MEXC to see the data and maybe make the trading decisions by themselves. So, like, I would say there's a huge increase for the whole UI UX for user. But like when it comes to juggling between so many different platforms, like maybe AI would help in that sense. So I kind of want to get your take on AI, or is MEXC adding any like AI trading tools for users to make the whole trading experience smoother?
We are actually one of the I believe the first exchanges that added AI and AI trading capabilities. for our users. Today, we have more than 7 or 8 different aspects of the trading that we cover. As a CEO, I always say at this point, our biggest logic is the AI is the greatest co-pilot. We still want our users to make their own decisions in terms of the trade, but AI helps them to make these decisions faster and more precise. And eventually, I believe with AI's capabilities, we will be able to bring institutional grade trading tools to the user and help users to make very complex decisions. And when you have all these different opportunities to trade in a single place, from prediction market to stocks to crypto, actually users will not be only opening a single trade to grab the opportunity, they will be also able to hedge one opportunity against another and make the best outcome possible. And definitely AI is the next big thing to make retail user as powerful as an institutional trader.
I kind of want to get into your own trading experience right now, because you mentioned AI and trading. Do you find AI trading actually profitable from your own experience? Because it sounds right now, okay, it sounds really good. It's a really good idea. Basically, AI would handle everything while even you are trying to get some sleep. But like for the actual example, for the actual use cases, do you think AI can actually make your trades profitable, or it's just more like a risk management, like you said, maybe hedging some position that you already have?
I personally extensively use AI, especially AI grid bots, and they help to, as you mentioned, both minimize the risk exposure and also grab the best moment in the market. But also one key point when it comes to AI is that today AI is heavily subsidized. At MEXC, we subsidize it for our users, and almost all other big AI agent provider is subsidized heavily by different governments, different bodies. And it sometimes put the users to the blind spot where we think that AI is completely free or it is very, very cheap, and the trades it does are much profitable. But I'm not sure in future if the prices go up or actually we have to pay the full price to use AI, how much profitable that particular trades are. But today, as AI is still in this exploratory form, as we are all kind of subsidizing and trying to teach AI and to help AI to learn more, I believe we are in this a great era to take an advantage, and that's what personally I'm trying to do. And I believe that AI is a great, as I mentioned, co-pilot. And it's not only about opening and closing trades. AI is great at summarizing news, giving you the triggers, or even looking into the different trading strategies that other traders are doing or other bots are doing.
Yeah, I mean, I happen to agree with you. Like AI is really helpful, especially maybe giving you news and analyzing the market trend. So like this is the perfect moment for you, for me to ask you your market or maybe macro tech. Because right now, because I personally I've been in crypto for quite a few years as well. I've seen the ups and downs, the bull and bear market. So I would say this. Maybe in 2025, the bull run is so different from what I've seen back in 2021. Because everyone was hoping for an alt season, yet we didn't get one. And arguably speaking, altcoins hasn't been fully back ever since 2021. So one narrative people like to push out right now is that crypto is reacting to macro economy or global news instantly. Do you agree to that, or you think maybe there was a short period that altcoins was back a little bit, and that was the alt season that we were hoping for?
Honestly, I have a completely different take on this. I believe no more we will see in its classical terms bear markets or bull runs in crypto of 2-3 year cycles. Instead, we will be seeing a very short and very rapid cycles, or super cycles we can call it, or rapid cycles we can call it. It depends what we consider, where we will see a sharp rise and sharp fall in a quick, I don't know, 6 to 7 months period maximum, but ideally 2-3 months period. We'll be seeing a particular coin group. I'll not say altcoins, but whatever it's trending in that particular moment. It can be cloud computing, it can be deepin, it can be real world assets, it can be particular, I don't know, zero knowledge protocols did that. It can be that particular genre or particular what the narrative is around of that sort of project, all being hyped in a market, climbing rapidly, and also crashing rapidly. And I think that will signal a lot of volatility in a market. But today, I believe, because also the global economy is running on narrative, for example, with the quick start of the tension in the Middle East, we see what happened with the oil prices, but we also saw how people go and actually invest in defense stocks, right, in parallel to hedge against what's happening in the market. And I think that's kind of a reactive model we will be also seeing in crypto as more and more products are built on chain or use blockchain as a technology.
Yeah, you just gave out a really good example because, I would say geopolitics are definitely getting more uncertain by the day. So, oil prices is going up. There are tensions between different countries around the world. But, as you mentioned, defense stocks kind of quite benefit from this uncertainty in the market right now. So, I would say, trading in this market, it might be more difficult than before in a sense. So for that, how would you advise other maybe viewers on Roxham TV? Is there any macro signals that you're watching very closely right now, and maybe we're going to benefit on how you trade in the future?
I believe we have to look into the speed that we conduct trade today, right? Today, it can take, even if you do everything manual, it will take you 2 to 3 minutes to actually put a trade in place. Back in times, it would take days to that trade fill. And therefore, all the decisions you would make should be logical in coming 2-3 days. Today, all you have to do just to think about where that market goes in the next 15, 20, 30 minutes, couple of hours. And in every market move, a trader can make money. And that's why today we see that sharp rise on different interests. And we don't see any more people who exclusively trade, let's say, crypto. Back in times, there was a huge group exclusively traded Forex, exclusively did commodities. Today, every retail user or every institution is able in a single platform to conduct trade in a couple of minutes. Therefore, today, trading is all about capturing the opportunity in the market, and there's no more conviction. There is no more just this long-term belief in that particular group. If today the demand is petroleum, we all go trade petroleum. Tomorrow it's gold, the next day it's Bitcoin. But definitely in this kind of a heist to capture the best out of the market, I believe still we all need to have this long-term vision, such as I'm a very big Bitcoin maximalist. Even with all the news around quantum computing and others, I still believe that, retail users should focus on accumulating long-term assets. And I think that's a completely different narrative that market might be not considering at this exciting moment where the world is going to a different direction. Traders is still able to capture the value from the market.
Yes, you just brought up a very interesting topic, and I really want to get your take on, because you mentioned you are a Bitcoin maxi. Despite Bitcoin dropped from 126K all-time high right now, today kind of hovering around 71K. But you mentioned quantum computing, and there happened to be a kind of a latest development this week because there is a warning coming out from Google that is one of the biggest tech in the world. So when Google said something about quantum computing and a concern about cryptography, people listen and people pay attention. So what's your take for quantum computing? There is a headline from Google, 2029 is going to be very dangerous for Bitcoin and cryptocurrency. And what do you see? Do you agree with Google? And why do you think, despite quantum computer, Bitcoin is still going to be all right in the future?
I believe as faster technology develops, we develop more ways. And I believe the same way quantum computers will be able to crack the cryptography, there will be much stronger cryptography in the place that can compete against that. Therefore, I believe even first and foremost, I'm really happy that technology is developing faster, because we all were planning for next 5 to 7 years. Now Google is talking about next 2 to 3 years. And I believe this will actually move the entire financial systems to a much, much different scale in the way we operate. And I'm very excited actually to the technology to come up and develop rather than the other way around. And I don't think that this should trigger people, to go away, because I don't think that even the quantum computers coming will be able to kind of wipe out the entire Bitcoin ecosystem. I believe on the opposite, it will be able to build a new layer on top of an existing ecosystem, how we can treasure the assets we have and how we can safeguard them.
Yeah, I like the take. Certainly is exactly what our viewers like to hear on Roxham TV for sure. But now I do want to shift gears a little bit, because I want to compare Asia versus the US. I'm not sure if you're familiar with Asia. I'm sure you're very familiar with US.
I am.
But one thing I know is that MEXC is very, I would say, very decentralized, because users are coming from very globally. So you have users from a different region. So you as a CEO of MEXC, like, how do you see all these regions? So Asia, to me, it seems like it is moving much faster, maybe even when it comes to the regulation side, because here in Hong Kong, we have new regulation even quicker than the US. We actually front run on the whole ethereum spot ETF. We front run the US. So like when you compare different regions like that, do you think maybe like for US, is it like driving innovation away locally to other countries in Asia? Like how do you see these two different regions? And for MEXC, like how do you come up with a strategy to maybe even attract capital or attract users from these regions?
To begin with, I want to mention that at MEXC we serve 40 million customers from 170 markets, and our team of more than 2,000 people come from 45 markets. Definitely, we have the coverage of a very diverse background. And when it comes to crypto adoption, policy making, and the financials in the industry, definitely US was always a huge capital market, and also was huge in innovation, driving innovation. But through the US's relationship with the entire crypto narrative until the current term of President Trump, we all know was much, much different, which eventually pushed crypto away from United States. And we saw a huge migration of the crypto investors and crypto builders, both to the Middle East and Southeast Asia. When it comes to Southeast Asia, also like Hong Kong, definitely is one of the biggest hot points, both for the regulation and both for the availability of the capital. But I believe also one of the downsides for the entire industry was the ban of crypto in China, that definitely kind of saturated the way we see the crypto map today. And in my opinion, when we look in the Middle East, we see in the Middle East both they are equally fast with the regulation, and I might say the regulation in the Middle East is more prone to kind of embrace investors, and we see a lot of the capital inflows also in the Middle East. But definitely what makes Southeast Asia is one of the greatest places to build in crypto is the retail users, because in Southeast Asia, and I'm not only sticking into the Hong Kong, but I think widely from Vietnam to Indonesia, Malaysia, there's a bunch of crypto savvy users who are very well versed in crypto. Is it cheaper also to onboard the user in that particular market, making that market one of the best places to actually build, test product, and also deploy capital. And I think Southeast Asia, even with all the new regulations coming in the US and more opportunities to embrace crypto, I believe still in next few years, Southeast Asia will remain one of the crypto's best places to build at kind of narrative, in my opinion, because as you mentioned, the fast regulations, but also possibility to deploy capital and also proximity to great talent.
Yes, I'm with you because you gave up some examples, for example, Middle East and Southeast Asia. I have personally traveled to these two regions for crypto events, and I would say the mentality or the trading nature is very different from what I see in Hong Kong. Because the trading, I would say they are a lot more active and a little bit degen in a way. So they are really into smaller coins. And for Middle East, they are a lot more open-minded when it comes to innovation or maybe a new tech that coming out in the market. So that is a very interesting dynamic that I witnessed, like even in Asia, like the region, the same region that I'm currently in, because like there are happen to be different cultures even within Asia. So that's something I spotted as well. So since we are here at Roxham TV Hong Kong, so my next question I want to ask, is there anything Hong Kong traders should be really excited about MEXC maybe this year now that you become the CEO of MEXC?
I believe not only for Hong Kong traders, it's a very, very specific group. I believe for global traders, as a whole industry, I think I'm very excited because we are, as I mentioned, embracing multi-asset approach where our platform is becoming trade everything anywhere at any time platform. And I'll be bringing more and more sophisticated tools and investment opportunities, and we'll be trying to do it faster than anyone else, that our users has a first-hand approach to the new asset classes. This year, we are also looking forward for MT5 assets, US stocks, more and more synthetic commodities coming on board, and definitely the prediction market. And of course, I can't just wrap up without mentioning that again and again and again, that we are very proud to be at the forefront of zero fee and making trading affordable for our users. And that will be one of the things that we'll be trying to expand to make sure that every user can conduct a trade with the peace of mind that 100% of their money goes towards their investment dreams, and probably they make the best return on investment, because our goal is definitely to open the gate to infinite opportunities, and that is what I'll be trying to build at MEXC coming year or coming years, hopefully.
Amazing. That is a really good wrap up from you, Fulga. So it's been great to have you here on the show on Roxham TV. So for our viewers out there who want to know more about the updates of MEXC, or maybe some of your market perspectives because you share some of the really insightful market analysis here. So where is the best way for our viewers to reach out to you?
Definitely across all the social media. You can both find me, USI Usiza Talk, and also MEXC's official account. We are 24/7 operational, and also I am very, very glad, and I'm very fast actually responding across the social media. If you have any questions, do not hesitate to reach out to me through the direct messages or comments. I'll be very happy to engage with every user as much as I can.
Amazing. So, Fulga, thank you for joining us in this conversation today. So, that's it for today's show. We do have more show by our other hosts here on Roxham TV, so don't go away. As for my live, I'm here Monday through Friday, 3 a.m. Eastern Time. If you haven't subscribed to Roxham TV, make sure you do so, and make sure to like this show and share to others to spread out the Bitcoin knowledge, because we need to bring out our Bitcoin master